Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you as always. On today's show, we're just talking about this rally this morning, this continuation rally. This morning, the cruise stocks are in focus. They're probably trying to play catch up to the airlines and the Hertz's and everything else that rallied last week. So we'll talk about this rally this morning here in the cruise stocks. Oil is in focus. We have a couple earnings for the week, but not really not a big week on the earnings front here. Twitter caught some love this weekend in Baiynd, and if there was a report over the weekend that Gilead and AstraZeneca could potentially merge. That seems unlikely, but we'll talk about that. Our guest this morning is Baiynd. She is the founder of thetradingbook.com. You can find her on Twitter at AnnMarieTrades. Before I throw it to Joel, I want to remind everyone to check out Benzinga Pro. I'll put the link in the description or in the comments here to free 2-week trial, and hit the like button on our video, subscribe, and that tells YouTube that we are alive and well in their algorithm. I will throw it to Joel now. Joel, give us a quick recap here on the overnight session. We were trying on the pre-market show to figure out when the last time we actually were down overnight was, and I think you said we were down a little bit on a Wednesday, but it's really more the same here this morning as I'm trying to unmute you on Zoom. But maybe unmute yourself here because Zoom's not letting me do that. So
I'm unmuted. Joel, you're muted.
I don't know. For some reason, Zoom is not letting me unmute Joel. It's very strange.
And I am unmuted.
All
Good
right.
morning, traders and investors from around the world. Welcome to another rally here in the S&P 500 futures. You can't unchanged. I mean, you just have to buy unchanged from now. You can't get it lower. You can't get it a lot lower. You can't get it near the daily pivot. Your close on Friday, 31.8675. Your low, $3 below that, 31.83 and a quarter. Potential double top here. 10.50 was your high on Friday. 11.50 is your high so far, but even I don't think that's going to hold up today. Crude snuck over $40, got to 40.44, cleared out those buy stops at 40. Now back down 42 cents at 39.10. Gold trying to reclaim 1,700, down 14.5 or up $14.50 at 16.9070. Silver trying to get back to 18, up 34 cents at 17.82. Bitcoin flat on the session, up $25 at 9,825. And let's bring in the world-renowned national, international, world-known consultant who was in Baiynd this weekend. I hope everyone saw it.
I didn't even see it. No, I saw it. It actually was Thursday, I think. I saw it online, but I didn't see the print.
You made it. You made it. You made it.
I made the big time.
You are big time. I'm big time.
Steve Sears. We have him on the show, so a little inside connection there.
I mean, when are you leaving us? I mean, when are you going to CNBC or Fox News? Come on, Dennis. When are you going to quit hanging out with us? You're big time now.
I'm here.
Do you know
what they say in Baiynd?
They just your tweet. He said, he was just talking. The column was about the market and just how do you take advantage of just a market to go straight higher. And he used your tweet where you used to say buy the rip.
I used to say buy the dip and sell the rip.
And then
last week I tweeted out on Wednesday. Now it's buy the dip and buy the rip.
And boy, that
Steve
was
liked that. He actually reached out to me. Steve Sears is great. He reached out to me and said, "Can I use your tweet?" And I said, "Yeah, go for it." So I knew it was coming. So thank you, Steve. You're listening.
I've been reading Baiynd for I don't know 30 years maybe, and Every week, I look for someone I know. Well, there's a lot of people we know because we
Ah,
have a lot of guests. And I was actually thinking of canceling it because it's just kind of like a recap of our show from the week. I'm like, yeah, I knew that. Yeah, I knew that. But I like to read it. It's they a little bit forward looking. But the fact that you were in it, Dennis, man, I am not canceling my subscription.
so
I'm
see, it
sticking with
works.
it. Yeah, and
Steve needs a raise.
I'm gonna invite Steve back on the show too. I'm gonna
Yeah. Oh
get
yeah,
him
he's
on
getting
soon.
back. He's getting back on. He invites
You
us into Barron's. We invite him onto the show. So
exactly. All
anyway, the
right.
market is this. It's so like the tweet was timely. Obviously, that's what I would turn to. In the last 3 days, they just can't stop buying no matter what. Like you were saying, even in the introduction. I mean, we get a pullback of anything, and they're buying it here. Now, it's not with all stocks. It's still the wicked rotation. Technology completely out of favor. QQQ is lagging, and Apple saved the day pretty much on Friday with Apple breaking out. But if you look, QQQ, the tech stocks, the growth tech has definitely lagged. We saw stocks like Peloton had a rough day on Friday. Stocks like the gamers had a rough day on Friday again. It turned a little bit midday so that it didn't look so bad for the gamers, didn't look so bad for those stay-at-home plays. And obviously, we talked about that it wasn't really a great day for the banks and the airlines because they fell significantly off the highs. I mean, UAL, if you want to bring up that airline, was trading at 48.9, opened right at the opening tick, 48.95. We
That one
talked about
did.
selling that opening, and it went straight down from the opening. So now you're getting the bounce. Now you still got the people that are saying, okay, I got to get in now. I still think I said this on the Friday afternoon show, which I've never been on before, but I think I said if we come in and we get a bounce on Monday morning, I think the airlines are to be sold and the banks to be sold in that bounce. So I'm going to stick with that. We're getting a nice bounce on all those things. I think the highs are still in. Again, it's hard to call the top, so they take it out, they take it out. But if I was going short, I would lean on Friday's highs in a lot of these things because you're going to get a test. Here's AAL up almost $2 here again this morning. It's still $2 off of Friday's high, but you could get a test of those highs on some of these issues, and that would be interesting. Like Wells Fargo, for instance, again, the banks very strong on Friday at the open, but then turned around and turned weak. We only 70 cents from Friday's high, so I gotta think Friday's high plays a little bit of defense there, a little bit of resistance. Let's see what happens with a stock like Wells Fargo. I mean, look at the WFC chart, Joel. It coincides. Look at this. Look at this too, which I didn't even notice. Look at where WFC opened on Friday, and look at the high back in April. Joel's
Right
gonna
there.
lick his
Oh yeah,
chops on
yep,
that one.
yep. I did. Oh yep. Let's see here. Your high on Friday, 33.89. Your high on that day, 33.91. Also with the
Perfect double top.
yeah, perfect double top there. Not back, up there this morning, 34. Maybe there's like a gazillion to sell at 34, right? Big whole number like that, $10 off the low. Uh, American Airlines, I talked about that 22.48. It got through it by a little bit. So if you shorted that when we talked about it, it went to 22.80. Sellers came in, filled the gap. But yeah, real interesting day for the airlines to see if they can get back up. But like with this CCL, I mean, we can go to those stocks if you want. Friday highs.
They're taking them out.
Yeah, it's going to be support. You're hoping you get this thing back at 23.
Yeah. I mean, to come in here and say the top is in this market, I still am saying the overall market's going to go to all-time highs. I just feel like it's overdone and buying the trash. I think eventually some of that money will move back into some of the stocks that, that led the charge before. So, it's tricky. It's very tricky to call a rotation day to day. It's very tricky to be shorting this market. I mean, to short anything flat out without having something else to hedge it with is really hard because this market just wants to go higher. The market wants to go to all-time highs. I've been saying that since 295 SPY. I'm going to continue to say it. You got to buy the pullbacks here because if there is any pullbacks, there will be some eventually here. But there's so many underinvested money managers. There's no immediate threat. Yes, we're seeing the COVID numbers climb a little bit in some of these states, but for the most part, we already know this market is comfortable with up to 2,000 deaths a day, and we're significantly off that total now. So this market will be comfortable for a while, even if the COVID numbers start to creep up. Now, if we start to get spikes and talk of a second lockdown, that's where you see the market really start to get hit. But until we start to hear talks about a second lockdown, I think the market still, the bulls are in complete control.
Yeah, you get the cruise lines pulling their weight today. You get oil stocks, the oil patches heating up today, right? Also, holy macro. Did you look at Ford's?
Oh, it's just taken off.
It's almost yeah, it's up another
It's
30.
right back to where it was before the crisis because
Yeah.
everybody's going out and buying a car.
Well, I talked to my older daughter, Dana, who works for Cadillac, and she does their digital advertising. And, they talk to dealers, different that they can't keep up. Like these dealerships are just swamped, because people are like, I needed a new car. I needed a new car. And now, boom, everyone's going in there. I mean, it's making up for lost time there. But Ford,
I don't see that. I don't know if that's selective perception or not, but I can't see with the unemployment rate as high as it is. I can't see people, jumping in to go buy cars.
What?
I think it's all about the low bar. I don't think there's, a case here where Ford's going to just be killing it. I don't think they have to kill it. They just have to beat that low bar, which is so absolutely low. So, maybe on the high end stuff, maybe there's some rich people that got richer with the markets going and buying cars.
Hell yeah, everyone's home
Cadillac
day
is a very
trading.
high end car. Maybe that bodes well
Right.
for Tesla too.
Yeah.
But you got to think there's complete separation between Main Street and Wall Street here. So I don't think it's a case where Ford and GM are all of a sudden going to have super record high numbers because we're coming out of COVID.
Perception.
What are your thoughts here, Spencer? You're quiet in the background. I mean, I think there's a lot of people really hurting.
I think it's a bit of both things. I think maybe you're both right. So there probably is pent up demand for new cars, right? People literally could not buy new cars even if they wanted to for the past few months. So there's definitely some pent up demand. How long that pent up demand lasts for is a separate issue, right? Because Dennis is right. People are hurting. So I would be curious what Dana says, Joel, a month from now, right?
I mean, it's Cadillac too. People who are buying a Cadillac are always going to. There's not the people that are unemployed. So it's a high-end car. So I think your high-end car market bounces back quicker than, your economy Ford Focus. So again, though, the stocks are rallying because the bar is so bloody low.
There you go. Yep.
That it's going, if they see any, we've seen in the way they spin it. We've already talked about the way they've been spinning everything. I mean, Uber, the way they were spinning it and saying, yeah, here we are, and sales were up, 80% from where we were. I don't know what the numbers were, but they were looking at April to May sales and they were way higher. Well, of course they were, because April was down 93%. So when you're only going up 80% from the month before, you're still way off from where you were. Even the way they spun that jobs number in the media. So let's say,
I'm glad you mentioned that, Dennis, because I did want to bring that up.
Yeah, bring it up.
So the BLS, the Bureau of Labor Statistics, I guess there was a big note, a significant note at the bottom of that jobs report last week, and essentially the note said that the BLS made an error, a survey error, in the way they took the survey, and had this error not been made, the real unemployment rate would have been 3 percentage points higher. So they misclassified a number of workers, and it made the data seem better than it was in reality.
But this market doesn't read footnotes or care about footnotes, and and how do we know that's not even intentional? That they spin the data that way and put the footnote saying, oh, the market will love this number, this top line number, because all the algos do is read the top line number, and they ripped it on that jobs number.
Yeah,
they're like, holy cow, it's over. We got all these jobs coming back. But even if you took the numbers at face value, we lost 20 million jobs or whatever the month before, right? So we get 2 million back. Doesn't that mean we're still down 18 mil? Isn't that the math? Am I not right with that math, or am I wrong? I'm not an economist, a stock trader, but a 20 plus minus 20 plus 2, the way they taught me back in grade 1 math, when I take a minus 20 and then I go plus 2, I still have minus 18.
Okay. Yes, I think it just speaks to the fact of how hard it is to collect data in real time in this kind of in this environment.
It's all just
it's really hard.
What was that from? What's that line? Help me out, chat. From no, it's too early in the morning for me. But when Matthew McConaughey's sitting there with Leonardo DiCaprio in the opening scene of the Money, of Wolf of Wall Street, and they're sitting there at the diner, And he's like, people don't know whether it's going. Nobody knows whether it's going up or down. It's and he uses his hands and he says something. What was it? Do you remember that line, Joel?
No,
Calls the market.
all I remember is
Wolf of Wall Street.
the pounding of the chest. Dennis, the
The
pounding
of the chest.
Pounding
Boom,
of the chest.
boom, boom.
Okay. On that note,
Somebody in the chat's gonna know what he called it.
Yeah.
all right. On
But
that note,
anyways, he's like, nobody knows where, really, anybody calling this market, like I've been calling it, like it's going up long term, but the path to where it gets there, it's difficult. There's going to be a Fugazi. You said it's a Fugazi. Nobody knows. That Matthew McConaughey scene, the 7 minutes in that movie,
You guys.
like he rocked it, man.
You
that was good.
guys.
That was good.
Matthew, if you're listening, you rocked that opening
Fugazi,
scene. I can
Pixie
rewatch
guys.
that again and again and
Oh
again.
my gosh, you guys.
Dennis, what do you
Nobody
assume?
knows, and if you make money, then we give you another good idea.
Dennis, what do you assume that everyone who listens to the show? Matthew McConaughey, if you're listening, he's not listening.
4,000 people listened on Friday. Maybe Matthew's one of them.
Let's
And
bring on. Wait,
a lot of people are tuning in because they saw Dennis name in Barron's too.
that's
So
true.
did
That's true.
did you crank up the
Keep
did you
going
crank
up
up
to
the
it.
servers in order to handle the
Yeah, we
extra
got backup
traffic?
servers now.
Yeah.
All right, I'm bringing our guest in now, Anne-Marie Baiynd. She's the author of thetradingbook.com. You can find her on Twitter at Anne-Marie Trades. Anne-Marie, good morning.
Good morning, everyone. How are you?
We're pretty lively for a Monday morning. I have to
Yes,
I have to
you
say.
are.
Fugazi.
Certainly
How
are.
do you say that word? Fugazi? Fugazi?
Fugazi.
Did you watch The Wolf of Wall Street?
I did not.
Oh,
I
Anne-Marie.
know.
Just watch the first 10
know.
minutes with Leonardo DiCaprio and Matthew McConaughey. That's the best part of the movie.
Actually, I have seen that clip. That clip is.
He rocked that
excellent. I
clip.
saw that on YouTube.
It makes you feel like Wall Street's all a bunch of, well, anyways, we won't say it. How are
There's
you
a
doing this
segment.
morning?
I am doing really well. I've been listening to you gents talk about what's going on in the space. And what I wanted to ask you is, have you perused the 100 most popular stocks on Robinhood?
I saw it this weekend
I
in a
have.
tweet.
Okay, so if you look there, you can absolutely see why these things are moving. The number one on the list is Ford. And then it's been very interesting to me to see when something gets into a resistance zone. I look at this Robinhood list and I'll go, all right.
How do we find that? How do we find that list? I'm not a
actually,
Robinhood client. How do we find
I'm not
that list?
either. So I went to robinhood.com
I'm going.
/collections.
Collection sounds like my accounts margined out here.
I hear
Yeah.
Dennis. I'll put the link in the chats. So
Yeah.
Robinhood.com collections.
Yes.
No, I'll put the link in the chats. Here's the
Thank
link.
you
Yeah.
very much, Spencer. That's great. Yeah. And so what this particular one will do, it'll tell you how many people, what percentage of them are buying, what their popularity rating is, and you can see how things are moving up. And you can really see they just came in and said, what's cheap that we can afford? And they went Ford, they went GE, they went all the airlines, they picked up
These
Carnival.
Robinhood traders are pretty smart.
Yeah, that's what I put in a tweet maybe on Thursday, or maybe it was Friday. I'm inclined to believe that the less experience you have, the easier this market is to trade. And somebody said, wow, that sounds like an excuse. And it might have been.
There's some truth to that right now, though. I tell you, there's some
Exactly.
truth.
100%.
Anne-Marie's speaking the truth here this morning. Amen.
It's really true, because if you don't know what you don't know, and you look at something and you go, hey, that's going up, and I've heard of that company, and they're around everywhere. I'm just going to buy.
Yeah.
And we are in this tsunami of free money that keeps moving up and up and up and up. I did a Fibonacci retracement on the SPX, and it looks like we'll pretty much come into that region where we had that first break it looks like, let me see what that number is. It's an 88.6 Fibonacci retracement, literally on the nose. It's 33.90. And it was the first real solid break. I've called that one the COVID-1 break, because we had two of them, right? We had the first break, and then everybody was saying, oh, it's not going to be so bad. And then, the wheels came off the bus. And so that is that edge. But literally, you can't, I look for, my thought is always, hey, can I find value? Where's the value in the trade? Because I'm always looking to sort of cap my risk. And it is so hard to say wait for a pullback, because literally if you put the tiniest moving average, like a 5 or a 6, something like that, it's still hugging the line.
It can't even pull back beyond through that.
Exactly. And so
the pullbacks have been tough. Like I was saying, I tweeted out last Wednesday, we went from buy the dip or buy the dip and sell the rip to buy the dip and buy the rip. I mean, they're just buying. It can't stop. It's like crack. It's just like, I gotta buy.
And then overnight, we heard Japan has literally the worst place it's been since World War II, and everybody's still cresting up. Everybody's still holding up. So I heard a thought, I've no way to validate it. It said that a lot of the folks who had the double whammy of getting the stimulus check, collecting unemployment, and potentially still collecting a paycheck, have all this cash that they're thinking to themselves, I need to do something, so I'm going to play in the stock market. And so there's been like record executions on the Thinkorswim platform, like I think 13 million executions.
Yep.
And so there's just a lot of people dipping their toes in. And so we can listen, we know it all. We've been around for, we're as old as the rocks around here. So we really know what happens when things get like this and there's this immense fever buying. The question is, is it different this time because we've opened this monetary floodgate of we'll buy whatever it takes? And, the Fed is sort of that put protection or whatever it is that holds the bottom. It really does bring to mind the thought of, well, maybe it is different, and who knows when the levee's going to break.
I mean, if you consider negative interest rates for a second, I'm not saying the Fed's going to go negative. They said they're not interested at this time, but they haven't ruled it out either. But if you consider negative interest rates, and all of a sudden you're sitting with cash in your account, and this is happening in Europe, and you have cash in your account and you get a bill for having that cash sitting in your account.
Exactly.
This is like, I've got to own something. And then you start valuing stocks against negative interest rates, put your CFA hat on and start applying, negative interest rates into valuation, and you can't even figure it out. So because, if you're saying interest rates are 2%, well, money will double if you do the rule of 72 every 36 years. So, you can look and say, okay, well, stocks are worth a hell of a lot more than, a 25 multiple. But if you go negative interest rates, are worth even a lot more than that. So you can put your valuation hat on. If you consider that rates could stay low for a long time or forever, or at least, or even potentially go negative, then you say, well, you know what? We're looking at the S&Ps at 24, 25 multiple here, and it's not that expensive.
Exactly. And I think you've built the argument right there for new all-time highs.
And I've been arguing it for about 3 weeks. I finally threw in the towel on the COVID short theory about 2.5 weeks ago. I made a bet with Joel. I don't know what the bet was.
We never officially made the bet.
I would have won that bet. But anyways, I was like, I think we're going all-time. We're 295 SPY that day. And I'm like, you know what? We've just been holding up too long. It's shrugging off all the bad news. I've been in the camp that, I think, this COVID thing is going to get ugly again. I still think COVID's going to get ugly again, but I think we're hitting new all-time highs before the COVID thing gets ugly again. Because I think the COVID thing doesn't get ugly until September.
Well,
this is my thoughts. That's my thoughts.
I do suspect we are going to have new all-time highs, because you're exactly right. You've built the absolute argument for where are you going to go for yield if you're not getting it in the absolute safest places, and they're actually charging you to keep your money. So yeah, absolutely. I think it's going to keep pouring in here, and I'd love to see some shallow, healthy fades, because literally I feel like I'm on a 50-foot unicycle every time I get on and get in any particular position, because it always feels like it's going to tip to me, because I've never seen movement like this. I've never seen. I am looking at a daily chart on the E-minis.
Yeah.
And I can see literally a month of candlesticks, a month and a half of candlesticks almost, where every day, if I touch the 5 exponential moving average, I blow right up above it as soon as I'm down below it, and everybody takes the bid.
It's been relentless. Like, somebody asked me this on Thursday or Friday, have you ever seen a market like this? And I have, but this relentless buying of stocks, of companies, because even back during the tech bubble, and I started trading professionally in 1999, but I traded retail from 97, 98. And even during the tech bubble, there was, there was a lot of buying, and it was, crazy valuations, and it was a lot crazier valuations than this, but they were buying companies because they were growing. In this case, they're buying companies even when they're dying. I mean, you look at Hertz. Hertz is bankrupt. The stock in the last 4 sessions has went up like 300%. It's bankrupt. So I don't know what people think they're buying, and maybe they think there's going to be something left for shareholders, but I think it's just on hope. I mean, well, WLL, same thing on Friday. Look at WLL in the last 2 days. Whiting Petroleum is bankrupt, folks. And they bought the stock from 80 cents up to $1.90. It's up 100%. So if you're shorting stocks hoping for the bankrupt stock to go to zero, you are getting absolutely punished. CHK, which I don't know if they ever announced officially, but same story.
Yeah.
They're rumored to be going bankrupt, and they haven't officially announced it. $12 on Thursday is now $44.
Yeah.
So they're buying companies that are even bankrupt. They are so hungry for anything. They have thrown fundamental analysis really out the window. I mean, you can look at the overall S&P and say it's not expensive at 25. But some of these individual companies, to be coming and putting good money into a bankrupt company means you don't care anything about fundamentals at this point in time.
Absolutely. And the hedge funds who buy good services that talk about these fundamentals and have said, hey, listen, you're going to have some short action ready. So many of them are short, and they're driving. You can see all the dynamic hedging going through the day, right? They're trying to have this negative thought process about, well, see, earnings really do matter, performance really does matter, and when the rubber hits the road, these things are going to rotate over. And you can see tons of dynamic hedging where as soon as the levels break in the ES or the NQ or wherever, they start having to buy it. And it just is lit. For me, you said you had seen it back when you'd seen things grow. I've never seen market action that looked like this. There's literally, they're retracing some of their edges, but particularly Friday, I had to laugh. I started laughing when I saw it bounce up into, prior weekly closes. I'm like, this is flat out bonkers. It is.
It's no fear. Zero fear in this market.
That's it.
Zero fear.
That's exactly right. And the only ones who don't fear are really the ones who are, I call it the Forrest Gump trade. And so this is what happened to me a couple of weeks ago. I thought, you know what? I'm overthinking this thing. And so last week I said, hey, we're going to institute the Forrest Gump trade. And it is simple as simple does. If it breaks the high of the prior day, You know more buying is going to come in at the first pullback. If it pulls back and dips just below the close of the prior day, look for support to open up, because it's going to come and you're just going to
The
buy and
close,
just,
I know the close.
it's,
I've been
yeah,
trying to. I overnight the last couple nights. I've been I'm going to get this a little bit. You can usually get a decent amount under the close, and I'm like, they're
I
just
know.
laughing at the close. Is like
Yep,
is
that's it. It's
yeah,
the line in the sand, and they go,
really
oh, here
moved
it
up.
is.
Yep,
Yep,
no
yep,
double bottoms, no
yeah,
no buying the overnight low, just
yeah.
close.
So, for me, as somebody who's always looking for the dynamic that says, wait, why might this be happening? The only thing that I can come to is that there is a sense that no matter what, the Fed's going to save the day.
Yeah.
They're going to throw in enough money, and they're going to throw in enough whatever, throw in enough stuff from the fiscal space for the government, and then the Fed's going to hold everything on the bottom. It's sort of like what Powell said at that interview he had on 60 Minutes, I think. Hey, listen, just so long as the government helps with programs to support the individual, we have an unlimited resource of what we can do for the markets. And you listen to it and went, oh, well, everybody thinks they're going to save the day. And so for me, again, it's one foot in front of the other, and I'm not overthinking it too much. And all the risk is elevated to me. All the risk feels elevated, but it's a place that you have to play. If you want to play, you have to play in the elevated risk, or
Real
else you
hard
don't
to
get
play
to play.
short.
Yeah.
There is.
It's been real tough. Like you think, okay, maybe some of the actual companies that are doing well, like the gamers, those have been good shorts, but they like the companies that aren't doing well in this market. The companies losing money.
Yeah.
But
We are
it's
seeing that rotation though for the
wicked.
NQ. Yeah.
Yeah. And again, even this morning, we're seeing the same rotation where they're buying up the airlines, they're buying up the banks. And if you look this morning, you've got the tech stocks that are trading down. I mean, the QQQ is in the red here this morning.
Yep.
So quietly
I
in the
saw
red.
that.
They don't want to own tech right now. So it's been the rotation away from the trade that they were in for the last few weeks, last 2 months, really. And they're moving into, and even though the QQQs did make all-time highs,
Yeah.
it's very much underperforming the IWM in the last week and a half, 2 weeks, because that's all about these smaller companies
Rotation,
that
yep.
are playing catch up to where the QQQs had already been. So it's the catch up trade, really. The question is, at the end of the day, who's going to be victorious here going forward? I would say I'm more of if I was a long-term investor and you're getting some good pullbacks in some of these good tech companies, I think I'd rather own them for the next 10 years than owning some of these broken companies. So as an investor, I kind of lick my chops at a few of these, tech companies that are getting thrown away now. And, I've talked about a few of them, like I already own some of the gamers, but video gaming isn't going away. Take-Two had a significant pullback on Friday. It's pulling back here again this morning. I own it already. But there's some opportunities as an investor to, buy some pretty okay companies here that are pulling back.
Absolutely. I think so as well. I really, really do. I'm a big fan of Roku, and I have been. And it had, this was one of the ones where I thought, hey, this one's it's gonna do all right. But it has had a terrible fade coming into the 100 area. So I have that. I have a short put spread there for 95 to 100. So today is going to be an interesting day, because as you can see that gap right there, thank you so much, Spencer, for putting that up. That 100 mark is kind of a big deal, and it came down into there and held it, but it's really going to have a push in order to keep it up over that edge, or my goose is cooked from that short put spread, because I just did feel like it was going to do a little pulling back, but not that much.
The stay-at-home stocks, and this is a classic stay-at-home stock, is completely out of favor right now. I mean, even Netflix, you can look at Netflix for some indicators here. Again, on Friday, we saw this trade reverse a little bit around 10:30, just after the open. We saw some of these stocks like Netflix catch a bid, Shopify turned around and started catching a bit from the
DocuSign.
lows.
Yep.
DocuSign. You started seeing it reverse, and you saw a lot of money rotating out. That rotation tried to come off a bit, but then again, the same story just came back in towards the close, going the other way, and then the overnight move has been there. I'm a little bit challenged. That's why I think, they started to show life on Friday, some of these stocks, the stay-at-home ones that have been beat up, for the last few days. So maybe, you see a turn here today, but it's tough to call these turns. So like you were saying, Anne-Marie, you're not getting any type of a pullback. You get even a slight pullback in some of these some of these, I don't know what you want to call them. I guess the going out stocks, the non-stay-at-home plays.
Yeah.
Anytime you get any type of a pullback, that's bought. So it's tough.
Speaking of the non-staying at home plays, the trade last week that flabbergasted me were the REITs. What the heck? Take a look at Simon Property Group. SPG.
Yeah, crazy move.
Holy cow.
Yeah. This is an airline full reopening play here. And they're hungry for it. And look at it again this morning. It's up another $7.
But we weren't going to the malls in the first place.
No, we weren't. No, and they still. Who bought TCO? Was it Simon that bought TCO?
Yeah. Yep.
Simon that's in TCO.
Yeah, Simon bought TCO.
But there's a lot of these, and you look at, and obviously we've had ADC, the CEO, on the show, and they've got, a little bit more stable customer base. That's why that one's held up so well. They got a lot of Home Depots. Their client base is awesome.
Walmart. Yep.
But you're right. The malls were in trouble before this started. So now we've decided the malls are going to come back better than ever.
Yeah.
I mean, there's no logic going into this market.
Absolutely.
But again, I mean, I'm not going to fight the tape right now. Like you said, from the technicals, just throw fundamentals out the window. Just use your technical analysis. These things are breaking out.
Yeah,
Tough.
walk up the moving average. It truly is the Forrest Gump trade. It's the only thing I have to think about it and I have to go, listen, just imagine if you were 5 years old and somebody said to you, follow the road. What's it going to look like? For those people trying to catch tops going, no, this has got to be it. I've gone to cash, waiting for my shorts. Listen, I feel that. I do. I feel that desire there, but nothing in the market is giving you any kind of heads up. And the thing is, even if we do shake and we have a deep fade, the first thing that's going to happen is buyers are going to come in, they're going to pick that up, and then if it can't break north, that will tell the tale. But until that happens, it's all she wrote to the upside.
This list, I just want to go back and then we can let you go, but I just want to ask you about this Robinhood list. I'm just, because I just saw this over the weekend, I never put any thought into it, but this is just looks like classic chasing, right? Like
Exactly.
This is just what's moving. I mean, if you think about, what I started back in, professionally in 1999, and I talked about, the story of like learning to trade, and I did the same thing. I see something moving, I jump on the train, and then all of a sudden it turns and goes the other way. I mean, the train jumping and the chasing has worked here right now and has worked very, very well. But overall, I feel like, in my 20 years career, and I'm going to ask you this question in a second, Marie, is usually when you chase, it's not a strategy to make money in the long run. It might work a couple times. It works here, it works there. Right now, chasing is flat out working. It's flat out working. I've never seen chasing work for a prolonged period of time, though. So I don't wonder that when you look at this, okay, every retail trader on Robinhood is focused on all these stocks that are going up 20% a day, because why in the hell are we going to go in the stock that's going down? We want to go in the stock that's going up.
Exactly.
But what happens, when, this comes unrailed, which it inevitably will at some point in time, I don't know when, this money's all going to look for the floodgates as it starts to, whoa, I can lose money in the stock market. I didn't know I could lose money in the stock market. You open an account in Robinhood in the last 2.5 months, you probably didn't even get it open because it takes time to open stuff, get your stimulus checks. All of a sudden, you're opening your account late March and you're thinking, man, this day trading is the easiest thing I've ever done in my life. I'm quitting my job and I'm going to become a full-time day trader because, and if you're a long biased, and we know 90% of retail is just going long, that you're going to be winning no matter what. All of those traders are going to be up because the markets went straight up since March. But what happens when you start to get, in a different environment? That's my question to you. is, do you see chasing as a long-term viable strategy?
Well, long term, I'm going to say that whatever long term happens to be, the answer there is no. My thought is what I am looking for is, listen, over the last 2 days, this is how I've been sort of focusing on everything. Over the last 2 prior days, we'll have a high and we'll have a low off of those 2 days. If I break the high, any kind of pullback below that area is going to give me a buy zone. And if I lose the low of the second day, I've got a problem. And so it's moved into something that is buy at support, sell at resistance, wait for it to come back. And if that if that support is only 5 cents below the close of the prior day, then, I take it, my risk widens up and I go again. But I cannot buy and hold here. It is not my nature. I've got almost 20 years telling me you better not buy and hold when things are going straight up. And I'm the old dog that I can't teach myself any new tricks to right now. And so I will buy at these levels and I will sell higher, and then I will buy at a little bit higher than the last time I bought. Yes, it's more execution, but it's all free anyway, which is also driving this motion of, oh my gosh, I got to get in and stay there. But it is your premise. You broke it perfectly down in 3 or 4 sentences. The reason this market is going to all-time highs is because there's nowhere else on earth, literally across all global markets, that's going to deliver upshot like the US stock market. There's no place else.
Anne Marie, you've been on with us for almost a half hour here. We
Oh.
appreciate it. One more thing before I let you go. Are you sticking with CyberArk here?
I am. I like the whole bit. And I picked up CrowdStrike on that last bit. But yes, listen, any kind of dips, new place to buy.
There you go. And
Any
you know
kind
what?
of
You're
dip's
getting a
new
dip
place
in
to
some
buy.
of these tech stocks.
Exactly.
Like CyberArk. I own CyberArk already. CrowdStrike. I mean, you got to consider valuation to a certain extent in your long-term portfolio, but as a trade, and I think Anne Marie's talking trading here,
Yes.
the dips in tech are very attractive here. Don't worry about valuation. You don't have to worry about valuation in the short term. You have to worry about if you're throwing your long-term investment portfolio. But if you're in this for the trades, the trend is still up on a lot of these, the cloud plays. We've had so many of these cloud plays that have actually pulled back here in the last few days because they've now moved into these other stocks. That rotation will rotate again. You start to see some life in those stocks. It might be a time that it might be a tell that the rotation is going to start to move back to those tech names. So I think the rotation eventually comes back into some of these growth tech names.
Absolutely. Totally agree.
Thanks, Anne Marie.
Yeah, Anne Marie Baiynd is the author of thetradingbook.com. You can find her on Twitter at Anne Marie Trades. Thank you so much for the time, Anne Marie.
See you. Bye-bye.
All right, wow, she was on with us for a head.
She calms me down.
That was fantastic.
Too,
she's the best.
Because I get so wound up, and Anne Marie's my calming voice. Even when I'm in a trade, I hear my Anne Marie voice there, and she calms me down because we know I'm hyper. So it's good for me. So it's almost therapeutic to have Anne Marie on the show for myself. So thank you, Anne Marie, for your calming voice and to rationalize it in such a clear and concise manner. Like, she's very clear. It's the reason she's been in the business for 20 years successfully there, because she goes with the flow, and she knows same way, you're looking at these things. She's got some of these trades on, and you got to be on the long side, but you got a tight leash. And, if you have a tight leash, you've been okay, but eventually these trades will come off, and they'll come off ugly, just like the airlines. And you can say how well they've been, but I mean, if you were jumping the airlines Friday morning and chasing, you're now looking at, AAL 22, and you've seen the market go straight up for 2 days, and you're wondering, how in the hell am I down in this American Airlines? Well, that was a big chase there that you put on. It just got a little bit silly. So can it consolidate and go higher? It can.
That's the best thing it needs.
But I like the consolidation and go higher on stocks that are doing well, and not stocks or companies that are doing well, and not companies that are doing poorly. I feel like this is a short squeeze from hell, and all of these, companies that are not doing very well right now. I mean, who was the CEO that was on Friday on CNBC that I was talking about? I forget now. Expedia. It wasn't the CEO, but it was one of the directors.
It was Barry Diller, right?
Yeah. And he's calling a spade. And he's like, our revenues are down 80% here. 80%, he was saying, Expedia. And he's like, the stocks come back and everything's come back, but he's like, we got a long ways to go. This is coming from the company, saying that, and one of the directors saying, we've got a long ways to go, but brutally honest. Instead of, the spins that some of these other companies are putting on saying, oh, our sales are up 70% from where they were in April. Buy, trying to almost pump their stocks up as you see these Edgar filings. And you're watching, the SEC filings. Have you been watching it, Spencer? Do you see how many bloody sales are coming through and not very many buys? Because I watch those things all the time in my Benzinga Pro. And you can show, the people how to do it if you want. But, I watch those filings. And every night you just see people selling stock and selling stock and selling stock. And you're just like, and I've watched these for years. I tell you right now, there seems to be maybe selective perception on my part, but there seems to be so many more insider sells here right now. We're talking about, directors that have to file 2 days after they sell. And there seems to be so many more sells than buys right now. There always is a little more sells than buys because people got to sell to live. So there's always more sells than buys. But right now it just seems like ridiculous. So I'm very scared for the investor that's coming in here right now and saying, okay, I got to buy American Airlines and I got to buy, Hertz because I know Hertz is going to come back. I mean, put good money in good companies. This is the investing hub. Put good money in good companies that are on good, solid ground. You go into these other ones, it's been working really well, the chase game. Maybe it continues to work, but my money, is still going to, some on the pullbacks that I'm looking to buy companies that are still growing.
I just want to real quick take this opportunity since you mentioned it, Dennis, just to walk you through how to find that info in Pro.
Show it. We'll pump our Pro a little bit.
It's super easy. So this is the Pro here up on the screen, and just go to a news feed.
Yeah.
And just change, and it's blown up so you can see it easier. Hopefully, sources,
yeah.
SEC filings, and press releases, and I'm gonna check that. But you can see here, and then now there's a lot.
Oh, there's so many filings.
And they come through 5, 10 every second. So especially on the hour and every 15 minutes. So
on the hour and the 15 minutes. Otherwise, you can follow it. You can kind of follow.
Sure, but you can like search for any ticker here, and you could just say here, like, I wonder what the filings have been like in Apple here, and you can take a look. These are also PRs. You can get rid of that, but that's how easy it is to just find that stuff in Pro. So, and when you see Form 4s, and that type of thing.
Can you explain, or maybe we should bring the Brentster on sometime just to explain, all the differences. Like, I know the basics. And I obviously know what I'm looking for. But there's some of these forms coming in that I don't even look at either. I'm always looking for, is there some buying? When you see the sellers, they don't care, especially in this market right now. They just don't care. So you see a big a big director sell. They're not going to knock the stock down on that for the most part because they just don't care. Unless it was Moderna because they were looking for it. I mean, they just don't care about the sells. But when you see a big director coming and buy, they will push it higher.
So so a Form 4 is what every insider has to file a Form 4 if they're going to change their stake in the company, if they're going to buy, if they're going to sell.
Some of those are planned sales too, like estate sales and taxes and things like that. So you gotta, they just have to sell, just because
they have to sell to live. I mean, a lot of these directors have a lot of their money in the so they're going to sell regularly. You see Zuckerberg come in and sell stock.
And
it doesn't mean he's bearish his company.
So. Right. So
asset allocation, reallocation.
Yeah, and some of these people are donating money. They're doing different things too. Some of it's for good reasons. It's not always just because they got to go buy a bigger house. In some cases it is, but there's lots of reasons to sell. Kramer says it best. We'll give Kramer some props. He says there's lots of reasons to sell a stock, but there's only one reason to buy it. And if you're buying the stock, you think it's going higher. So that's why the buys are always the focus there. But just from my selective perception, what my point was being that I am seeing a lot of director sells and a lot of stocks that you're like, oh, they've had huge runs. I mean, here on Friday or on
let's get an example.
I want to show an example. Go to Slack. WORK. Bring up Slack. Stock had an incredible run. And not saying that these people knew, but they're directors in the company. Maybe they didn't know. But bring up and show, what was happening before the earnings report. So 2 or 3 days before the earnings report, you had some significant. This actually just filed on Friday, but you got to go back because it's 2 days late, right? Because they file and they have 2 days to file. So you're always looking at a 2-day delayed from what they did. But I mean, here you go. So you got Andrew Brasia sells 184. No, it's just scroll up. The 2 top ones there. You had it on the screen. So Andrew Brasio sells 184,000 shares at 39.96.
Good
And then you
sell, man.
Oh, look at the high, 39.99 and 40.07. Holy, this guy should be a day trader. But here he's selling 184,000 shares of the stock right before the earnings report. That's literally the day before they reported. So, and there's another, chief technology officer, only 3,000 shares. Maybe these are sales that they sell all the time, and there's always somebody going to be selling. We're not saying that they were doing anything funky, but
no.
The timing of that is incredible. But what you see is, some of these directors are coming in as their stocks have went really high. Maybe this guy was saying what I was saying before the report, and it's like, okay, well, we don't know, obviously to keep the numbers, very tight there, and some of the directors aren't going to know that information, but it's like there was risk to take that through the report. It's like, I'm going to lighten up a little bit here before the report because it's like going to be really high expectations going into this report. So sometimes these things can be a tell.
All right, S&Ps, we were talking about follow through Friday's high, 1050. We got up there, 1150 is the high. So there, green skies ahead of that. If you look on the daily chart, I don't have a daily high until 32.48 and a quarter. That could be a nice target, maybe not for today, but later in the week. Someone asked about work, and it's interesting to take a look at the technicals in this one. Now you $2 off the low on Friday, 30.52, and we talked about that $30 level. 30.42 was your May 27th low. So there's the line in the sand. I think that even if you get a pullback today, I don't think you're going to get down to that 30.52 either. Because people are like, I missed the bottom. I got to buy. I'm going to buy, I'm going to buy at 31. But you got a reference point. And also the other reference point here is the close. And it's just dancing around the close. I think this thing, will trade the daylights here. The best thing, if you're looking for this to be a bottom, you want to trade the daylights out of this 32 handle today, maybe dip to 31.40, close, 32 and a half or right in this area. But I'm not going to get real excited until you take out that high from yesterday or Friday, which was 33.60. So just a quick technical look and at the earnings, how the stock reacted, and big volume on that day as well. So I don't think you're going to get to see that 30.56 or 30.52 low in work today.
Somebody asked me about work too, or multiple people asked me, but somebody asked me, do you like it at 30? And I just responded, yes, I do. I think it didn't quite get to 30. I thought about buying the pullback in work. I really did. I didn't. I like it. I'm not told. The one thing is the rotation's not in its favor right now because they've been selling all the stay-at-home stuff, but that rotation could turn. You got a significant pullback here. It needs to hold that level, though. What I will say is if I was buying it around 31 or 30, that's my out. Say $30. You don't want to see it start taking out 30 because then you think, okay, well, this trade could turn ugly. Keep an eye on Zoom too. Zoom is holding up well. The earnings report was fabulous. Like I said, that was one of the best earnings report. Kramer said it too. That was one of the best earnings report he's ever seen. Fabulous. Valuation's just, crazy though. It's high in work too. And that's the issue. So they're fighting two things right now. Work is fighting the rotation being away from the stay-at-home plays, which Slack is definitely a stay-at-home play. And the second thing is it's a little bit of a valuation issue where it's always, been, with the growth, is there still, but it wasn't blowing it out like Zoom was. So it's not surprising it pulled back. 30 is a big number.
And this is a New York stock here. So I don't know how many people here have the New York open book, but you could see where the institutions are putting, their orders. Maybe there's some institution, hey, they missed the 30.52 low. Maybe they're at 31 today. So there'll be some, some true orders in the book there. Keep an eye on those as well. Someone thinks it might go to 34 today. Man, after that, first you got to get through 33.60. That was the high from yesterday.
It's going to be choppy. It could see 34. I'd say Joel's giving you a good number. Let's see what does at the high, 33.60. Yep. These things don't have to come back right away. Right. Look at Take Two, and nothing to do with it. But, Take Two reported fabulous numbers, fabulous numbers. It was really good. But the rotation made it, come off, and it sold off. It was 157. You won't see it on the charts. It was 157 after hours where everybody was diving in. And that was the top. And then it's pulled back, and it pulled back on the earnings day, and people are like, well, this is ridiculous. This company's firing on all cylinders. Even Kramer was saying I'd be buying the pullback. Well, what's it done since? It's continued to pull back because the rotations continue to be out of favor for stay at home. So until you start seeing money significantly roll into the stay at home plays, the work could be a little bit of pressure on it until then. So rotation starts to come back into the stay at home plays. They start talking about cases going up. Work is going to be the way to play it.
Yep.
But
And Zoom.
we don't know. You still, like I've been arguing, and I've been arguing this publicly, I've been arguing it with my friends, is I think the COVID thing's on the back burner. I think you're going to see it going. We're seeing some numbers in Florida. We're seeing a few numbers come up, but people are outside. I don't care what it is. You know, like if you're outside, you're going to have less chance of getting sick than if you're inside with somebody that's sick, because the air wind blows around, you know, the air is open. It's going to be better. So I tend to think that the big second wave, I believe there is going to be a second wave, but I tend to think it's not going to come till September. And if that's the case, if you have 2 months of clear sailing, this market will be at all-time high. So if the second wave comes earlier, and, you know, Matt Kolb and, you know, some people have been arguing that, you know, Brazil, you look at Brazil and it's been hot there, although they're starting to come into their winter, so it's starting to cool off, but their cases have still went up significantly even in the summer. So, you know, there's people arguing that this could still be an issue this summer. A second wave might come earlier than you think. It's possible. Nobody knows. I'm just, you know, thinking that it's not coming in the next week or two.
And then Dennis, second wave, third wave, fourth wave, as long as they're not as bad as the first wave.
Exactly. This market is comfortable. We've saw it already. It's a sad thing to say, but the market got itself comfortable with 2,000 people dying a day. It's comfortable with 106,000 deaths in the US. So if the second wave isn't as bad as the first wave, the stock market isn't going to get hit to the tune of 35% again. You know, so it's tough when the market shrugs off. I never envisioned the market being able to shrug off that many people dying and, you know, also all in a lockdown, but it did. So, and Anne Marie's right. The market investors are thinking that the Fed will come to the rescue no matter what. So even though, you know, individual people might die, that your capital markets are going to survive because the Fed is going to defend them no matter what. And they did it before. And this is, you know, it wasn't just Powell. I mean, look at Helicopter Ben. I mean, look back to the financial crisis and look at what happened. If the Fed wouldn't have came to the rescue in the financial crisis in 2008, there would have been bank failures across the board. We were in a full financial markets collapse, and the Fed rescued the markets. So in the COVID case, it was never as bad as the financial crisis. I had speculated that it could be financial crisis part 2, and I thought it might, and that's why I didn't want to buy the banks. And, you know, it's still not totally out of the woods, but looking pretty much like you're getting out of the woods from a financial crisis perspective. But, you know, the financial crisis was dug out by printing money. Well, COVID was not nearly, you know, but it took a little bit of money to bail us out of this lockdown situation as well. So the market has, you know, many managers are saying, you know, fool me once, shame on you, fool me twice, shame on me. And they've learned in this case that the Fed is going to bail out the market with free money, no matter what. They just turn on the printing presses. And, you know, that's why I can comfortably buy stocks, because even if my stocks go down, I know eventually they're coming back because of the Fed.
All right, real quick, I just want to look at Gilead real fast here. There was a report over the weekend from Bloomberg that they had been approached by AstraZeneca on a potential merger. Both companies.
AstraZeneca going to buy Gilead?
A merger. So I don't know.
They accommodate. Yeah, I mean that was the news.
Yeah, so both companies declined comment, which you could interpret that either way. That could mean that this is serious and we're not commenting, or this is such a laughable thing that we're not commenting. But I
highly doubt that occurred.
That was the report. AZN had approached Gilead for a merger.
So Gilead's up $3 on this, trade near an 80. This is just my opinion. But I've traded Gilead really well. I have no position on it right now, so I can freely talk about it. This is just my opinion on Gilead. I'd sell it. I would sell this pop with 2 hands, because this is not the kind of stock the last time Remdesivir was getting positive data, it wasn't even popping. Gilead has had problems with growth for a long time. Yes, you know, I like it back in the 60s, but it's been a big move now. Even the last 3 days was 72. Now it's up at 80 on a bogus rumor, in my opinion. I don't think there's no chance of merging with AstraZeneca. Maybe there is. I shouldn't say no chance. I think it's a very low chance. But I would not want to be buying Gilead up here at 79.75 right now. I think the person buying at 79.75 loses money, at least in the short term. My opinion.
All right, Joel and I are going to hang out for a couple minutes extra just to sort of recap the stocks that we discussed on the show. So, Dennis, if you want to dip out. By the way, Dennis, I really enjoyed our afternoon show the other day.
That was fun.
It was super spontaneous. The people in the chat were not having it.
Yeah, what about that?
I told them Joel's unavailable. No, we're not going to do a 340 broadcast. They were not having it. They demanded
we have to have
something.
a show. The show must go on, Spencer.
They demanded
We're always on. Do you realize like how many years? When is the last time that we actually did not have a show? Did we miss one when we did the traders convention?
Yeah, we have definitely missed shows for our own events in the past. For our
only one, though.
Selfish reasons.
Well,
Dennis
doesn't go anywhere, so he can.
Yeah, I know. I can always come on the show. I just stay at home. I'm the ultimate stay-at-home play.
You were a stay-at-home play before
I'm
there was
stay-at-home. I invented stay-at-home, Joel. I invented stay-at-home.
Yeah.
I sometimes go weeks and I don't even see the daylight. I go outside. I'm like, the sun.
All right. I want to recap some stocks here we discussed in the last.
Talk to you a little bit, Dennis.
I'm going to trade.
I'll let you go. So during the show, I've been making a little watch list here on Pro. These are some of the stocks that we've talked about here. Let's look at CCL. Joel, this is one that
wowzer, and there's no specific news. Yep, it's picking up. First thing I like to do is I like to look at the pre-market high and trade. We faded a little bit off the pre-market high, and then I'll just kind of go through the same exercise that kind of helped me out with American Airlines. Remember, I was giving you that daily level at I believe 22.46. So first of all, your pre-market high for CCL comes in at 25.98, right? Did we get any better than that? So, you're thinking 26. Is there a big seller at 26? And I'm looking on the dailies here, and I don't see anything at 26. I see it's a gap fill from March 6th. So, 26 to 26.10, like don't get super excited if you clear 26 here. And then, wow, now you're in the 20, already in a 24 handle. I don't know. I think the high's in this one. 24.75, right where you're trading right now. That was your high on March 9th. And then above that, I think you have a lot of trouble up near that pre-market high in the $26 handle. Royal Caribbean, let's see if that is fading too a little bit. Yeah, not as much. Royal Caribbean, you want to keep an eye on the pre-market high at 78.88. It hit that not once, but twice. What do we have here on the dailies? Do we have anything on the dailies there? No, you don't. You have an 80.56 close. That was a close on March. Oh, that's a ways away. No, 75.92. I don't know if I mentioned that. That was your high on March the 5th. So that was kind of the same day that CCL did that. So 75.92, we're way off that pre-market high. I think that holds up. NCLH, Norwegian, that's getting a bump too. That got up to, 26.89. Wow, I can't believe how high this thing has gotten. And you're filling a little gap in there. 26.55. So that was a gap down. All on March 6th was all this big action. So go look at your trading action from March 6th and March 9th if you're looking for levels here in the cruise lines.
Let's do one more here. Let's do Ford, as we discussed.
Ford, holy mackerel. This is knocking on the door. Big old move, big old 2-day move for Ford. I don't know where the paper's going to step in this one, but you got to think there's a mound of stock at $8. You did get to $7.99, and that was at $8.15, and now you backed off. So, man, just look in your New York open book. It's got to be a ton to sell there at $8. So I think I'm comfortable with calling that as major resistance today. Then on the daily charts, I mean, if you want to try and get it on the cheap, the close from Friday, 734 low. I don't think you're going to see that 702 low, but first support level comes in at the close from Friday at 734.
All right, that'll be it for us today. I want to thank our guest, Anne-Marie Baiynd. Thanks to everyone in our chats, all three of them. Please remember to hit the like button and subscribe. That tells YouTube that we are alive and well, and it helps us with their mysterious algorithm and helps more people find our show. So please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I want to remind you all about Benzinga Pro. It's our real-time news feed and research platform. For a free 2-week trial, click on the link in the description of this video. You can always email us, premarket@benzinga.com. For Joel Elconin and Dennis Dick, I'm Spencer Israel. Everyone have a great rest of your Monday. We'll be on with you in the afternoon for the close. Have a good one.